Welcome back. This is Business Center on this Monday day, and we are opening the week with a discussion on the banking sector. How is it looking in this year 2021? And joining me to have this discussion is Melody Ndanu. Hi, Melody.
Hi.
Hi, how are you?
Fine, thank you. Thanks for having me.
Not a problem. I'm going to give you a chance to introduce yourself properly to our audience.
My name is Melody Ndanu. I'm a research analyst at Genghis Capital.
Oh, okay. Karibu sana, Melody. And remember, if you're watching us, you can keep this discussion going. You can post your questions online at Metropole TV KE. Please engage us as we look at the banking sector. Now, Melody, pre-COVID, the banking sector was performing, then COVID came as it was in all the sectors in the economy. It also took a bit of a hit. How significant was this hit to the sector?
So the banking sector suffered quite a dent because the pre-tax profit actually fell by about 30% to 112 billion shillings. This was mostly attributed by the increase in loan loss provisions, as well as a lower rise in income.
Okay. And now sorry, go ahead.
So that led to lower asset quality and thus the rise in non-performing loans.
Mm-hmm. Okay. And then now we have come to 2021, and according to a report that you released, it is looking good. Most of the banks are going back to the pre-COVID levels. What can this be attributed to?
This can be attributed mainly to four things. That's reduction in provisions, a slow growth in operating expenses, as well as non-funded income going up on use of digitization. And from this now, cost is optimized.
All right. And then you see when we're still at this, could you expound a bit on these areas that are expected to boost the earnings in this financial year 2021?
So first we can look at non-funded income growth. So we've seen that foreign exchange trading income has actually gone up, and growing commissions from diaspora, we've seen that the amount of money actually coming in form of diaspora remittances has been going up, actually defying the COVID-19 pandemic. And also because of resumption of trade services, we're going to see some more income from that. And just from mobile transactions as well, digital lending.
Yes. And talking about digital, on the digital platform, we've seen ABSA invest to a tune of about 1.6 billion. They launched Abi the other day. We've seen Equity as well. They've invested heavily on the digital platform and just to make it more interactive and easy to use, with MCOP and the rest not being left behind. How significant is the role of technology in the recovery strategy in the banking sector?
So the role is quite significant, and it's actually expected that banks will intensify this investment in digital products. This will help them to actually boost their income and as well as reducing their costs. So now we've seen actually, due to technological advances, changes in customer behavior, competition as well, it's going to push banks to renew their focus on digital banking platforms.
All right, and are we going to see a bit more growth in this front, or we are at the apex at this point?
I think we're still going to continue some growth because as the COVID pandemic is still going, and people have already changed their way of living to use online platforms to continue using their mobile phones. We've seen even KCB has launched its new platform called Vuma, and they want to recruit more clients on that. So they're also seeing boosting of lending on that. So we've seen StanChart as well. they have thought of going into automation of credit cards and digital lending.
All
So
right.
I think it's still going to continue.
All right. And let's look at now. You spoke about lending on the digital platforms, and lending is one of the ways that the banking sector, gains a lot of income and earnings. When we talk about lending, there is the request by the sector to the Apex Bank to approve risk-based pricing of loans. How is this going to play out in the short term, medium, and the long term? Should it be approved, that is?
So should it be approved, we see that customer loan rates may go up by 100 to 150 basis points. And it's expected that banks will use this to price in the risks into their cost of credit and actually encouraging lending to those who are perceived to be riskier borrowers. So the sector is hopeful that it will come this year, but it's more of an open-ended request. So you can't put a finger on when it will be done.
All right. So from where you stand, this is going to be a good thing for the sector, should it come sooner than later?
Yes.
Oh, okay. And then moving on to the efforts by the banks to grow their footprints across the region. We are seeing a lot of banks now expanding regionally and taking up subsidiaries in Uganda, Rwanda, DRC, and the likes. What is the significance of this? Is it even viable at this point? How has it affected the earnings so far?
So, so far, looking at the results for 2020, actually the subsidiaries, they contributed about 8% to the profits earned by banks. And though it rose just marginally by around 1%, it was still commendable, thinking that how the COVID pandemic has affected the whole region. So as the markets progress, as they recover, we'll see more income coming from that side. We saw Equity has said that now the subsidiaries earn around 23% as contribute that amount to their profit, which is actually 3 years ahead of schedule. So you can see that there is actually some potential in this when they acquire banks in other regions.
All right. And staying there a bit longer, Melody, comparatively to Kenya, how is it looking in terms of the sector in the region, Uganda, Rwanda, DRC, comparatively to Kenya? How does it look? Is it more lucrative there as compared to the country?
So you can say that there are various factors that actually want somebody to go to markets. Like for example, DRC, they have a very large population, they have rich resources, and to join into the East Africa community. Look at Tanzania, the new president Samia, who has eased the bilateral tensions between Tanzania and Rwanda, favorable business conditions, and South Sudan oil fields. So I think though Kenya still has a pocket of opportunity, they still see that they can gain some more in these other regions.
All right, and we're coming to a close of this discussion, but let's have a discussion on the prevalent risk. Which one is going to pose, in your opinion, the greatest risk to the earnings in this financial year?
So I'd say the biggest risk is the ongoing pandemic and the new mutations that are coming up, the looming fourth wave, and the generally slow vaccination process. This might dampen outlook because of the possibility of restrictions being imposed.
Yeah.
But the other risks as well, credit risk, data privacy and security risks, shifts in the regulatory environment, and also banks may decide to show up their capital and not pay dividends. So these are things that are still prevalent risks in the sector at the moment.
All right, and you are aware that we are in that season where we're gearing up to a general election, and how does that play out in the sector? Is it a time where does it affect the sector much? Is it something that would, put jittery around investors in the area? How does elections that we are gearing up towards as the momentum gains going to affect the sector?
So let's say like the foreign investors might be a bit jittery in case let's say post-election violence happens. So they would reduce their exposure to these emerging markets. But now that is all we have to just wait and see what comes up during the election period. But usually they become a bit jittery.
All right. So it sort of slows a bit when it comes to the election space.
Yes.
All right.
Yes.
Cool. And now let's talk about your overall recommendation to investors. Is it time to buy, to hold, or to sell? What is your recommendation?
For me, I would say it's buy recommendation. We have on Bank, KCB, Stanchart, and ABSA. Mostly due to their performance in Q1, and we anticipate that the performance will continue being better in the coming quarters. For equity, we have a hold because already the price has, the information of the dividends has been impacted in the price. So there's little headroom for continued uptick. So basically, just due to the possible reduction of loan loss provisions, and the gearing up of net interest income because of the suspended interest now being paid after the loan restructuring window was closed. So those are the key areas. We've also seen that actually Stanbic posted a 34.6% rise in profit, and it's actually recommended an interim dividend. So this kind of gives a momentum of what to expect with the coming results.
All right. So very, very quickly there, so that we bring it to a final close here, what does the future look like in the sector as we go forward?
I would say the future looks bright, but it all depends on the ongoing pandemic. So if conditions worsen, that might dampen the growth, but continued vaccination efforts, recovery of sectors, that would push the banking sector back to where it was, and even to greater profits, I believe.
All right. That is Melody Ndanu, a research analyst with Jengis Capital. Thank you so much for creating time, and thank you so much for speaking to us on the banking sector outlook in 2021. We look forward to having more discussions with you and in the future. Thank you very much, Melody.
Thank you. Thank you.
All right. And at this point, we are going to take a short break. Remember, when we come back, my colleague John Makali is going to be joining us with the latest in the world of sports and just reviewing what happened over the weekend. Stay at Metropole TV and keep this conversation going on our social media platforms at Metropole TV KE.